I want to sum up modern investing and modern investing theory that we know about in finance. I've taken a bunch of doctoral level finance courses, and I ask my students every once in a while that are taking these courses in terms of what is the best way to actually invest. And I'm going to tell you my take on this, and you might not like it. My take is, don't be an idiot. I want you to think about this. If there is a way to make quick money, that there is a way to find some way to prosper in the short term, and the short term is in the next year, don't you think that there would be far smarter people than you actually pursuing this? Don't you think that Bill Gates, Elon Musk, any of those sort of billionaires, all the crazy billionaires that you might think about, don't you think that they would actually be pursuing that with all the money that they have? And don't you think that they would be looking for these opportunities and snatching them up quicker than you because they have billions of dollars at their fingertips? I want you to think about that. Don't you think that all of the royalty in this world that own billions of dollars, I don't know, the Swedish royalty and the kings and queens of this world, don't you think that they'd be looking for all of these opportunities and snatching them up before you? Don't you think all of the hedge funds that have billions of dollars of assets would be looking for these opportunities before you can actually get to them? Don't you think that the number of people that are ultra wealthy, the number of people that have intelligence, that are physicists from MIT and Harvard and Caltech and all of those high-fluting schools, don't you think that they would actually be pursuing those and finding those opportunities before you do? All of this, I want you to think about, is me telling you, don't be an idiot. That is my biggest take on modern investing in terms of how we understand that. We can't get access to that information. We don't have the capabilities that a lot of people actually have capabilities for. So the only thing that we can do, the only thing that we can sort of look at is, hey, you know what? There's some long run trends that happen. One of these long run trends that happen is that the market just goes up and up and up and up at 10%, whatever, give or take 10% per year. That's the kind of a nice rough estimate. So if you know that it's going up by 10% and it's across all of the companies in the entire stock exchange, why not just invest in those if you know what that's the tried and true? I want you to think about this. Really, really think about this. I go onto YouTube right now. That's why I'm kind of making this, is I want to put out more videos about this kind of stuff, because I go onto YouTube and I see investing in baseball cards, investing in football cards, investing in, day trading and all this kind of stuff. Like, don't be an idiot. At the end of the day, all of this stuff, it's scammy stuff. You cannot pick stocks. You can't do any of that kind of stuff better than somebody else that has those resources that are far more smarter than you. If you think that you can profit in some sort of way and pick stocks, that means that you are the goof. You really are the goof in this circumstance. You can't profit from that kind of stuff. The only two things I would invest in are mutual funds and index funds. That's one thing. That's one class, right? Thinking about things broadly and diversifying across the entire economy, because that's how I know what actually grows. That's what we know. That's what modern finance theory would tell you to say and tell you to do. It's called the CAPM model, FEM in French, from the University of Chicago, which is the bastion of capitalism. That's where all of the greed is created and all that kind of stuff. Like when you think about in terms of where all of this modern greediness comes from. By the way, if you're at the University of Chicago, thank you. You have some great ideas. But all of that, right, is to say, so that's one thing to invest in. And the other thing is to invest in is this. Invest in me. Invest in this person right here. Invest in you. And the reason why you do that is that education actually has a far higher return than any of that other kind of stuff. And I'm not talking about investing in yourself to learn how to basket weave. Although, in today's modern economy, it might be a good idea to learn how to do something like that. But what I'm talking about is something that has assets and skills that is very valuable in the marketplace, right? So understanding, for example, getting something that's really basic, like a trade, for example. I'm super big on that, getting a nursing degree, getting some sort of understanding of how financial markets work, getting, I don't know, whatever. But I'm not going to say, so here's the thing, and that's one thing to think about. I also think if you're damn good at art and you're really good at it, yes, the market is just incredibly just rigorous and it's going to eat you up. But if you're damn good at it, man, investing in that is actually a really good thing, right? Investing in those capabilities that you actually have is a really good thing and actually could pan off in the long run. So, those two things, investing in sort of index funds, mutual funds, across all of the best companies in the world that we know of, but also investing in who you are, whatever that might be, right? Getting a course in psychology so you can better understand yourself and might be a little more level-headed in the future is a good investment. And those two things are the only things that matters. So if I had $1,000 and I was going to make an investment and I was to think about what I would invest in, the first thing that I would do is make sure that I have stability in my own house and I have stability in who I am. So that $1,000, most of it would actually just go into basic savings, right? Where I'm just sitting on it. I'm making sure that some sort of insurance for something bad happening, that I have money, that, next week I might run out of food and I have to have that $1,000 to draw upon. And then a fraction of that, whatever that is for you, I would think about long-term investing. And those long-term investing, the two big things I talked about. So maybe you pick, out of that $1,000, you pick $200. And that $200 goes into 10% or half of it goes into index funds and mutual funds. And the other half goes to investing in me and taking $100 and looking at different courses that I can take. Maybe it's not the $100. I'm going to be able to afford something that is actually a credible, legitimate course rather than that YouTube scammy stuff that you see out there that's trying to get you to invest in baseball cards and all of this kind of stuff. Mind you, that's a fun hobby. I get it. It's a super fun hobby, but it's not an investment strategy. That's kind of silly. Okay. So I would take that $100 and I would wait until the next time that I can save $1,000 and I got $200. And then I would wait till the next time that I've got $1,000 and then I've got $300. And I take that $300 or $400 and I invest it and get a legitimate course that that actually helps. Maybe you take your first round of courses in a CPA, for example, or maybe you're really good at art. You really truly are good at art, and you take your first real legitimate course with a legitimate artist that is doing legitimate stuff in your community that is actually a superstar in your community. You look for that sort of credible stuff. None of this kind of scammy, kind of goofy stuff that you see on the internet. Quit falling for that stuff. Don't be an idiot. Actually look at how things actually work, right? Like, look at old people that are wealthy. And I know that some people that are old people that are wealthy. Old people that are wealthy do boring stuff. You never see somebody that's doing the sort of scammy, kind of stuff that is ultra wealthy. Who do you know that has done that? Who do you know that has done that in your circle, other than on YouTube, that people are telling you this crap, right? Who do you know in your circle that has done this? Everybody in your circle that you realize that is wealthy, they've done the boring, tried and true stuff over and over and over again. Some of them might own a couple of apartment buildings. That's kind of normal. That's a little more too risky for me to do that kind of stuff. It's the same thing as investing in the index funds, but you're actively participating in that. But who do you know, as I want you to think about, that has actually done it, that has followed along on all of that YouTube crabby stuff, or whatever you see, all these kind of courses of getting you to do this scammy, pick your stocks and all that kind of stuff. Everybody else has done the boring, it takes 45 years to build wealth. It takes 50 years to build wealth. And we do that slowly and surely by investing in index mutual funds. And maybe if you are savvy, you might invest broadly in a bunch of bonds, but that doesn't typically, it's not as good of a return, but that's okay, right? Like, I want you to think about that. Is who do you know that has actually become wealthy by listening to all of that scammy stuff on the internet? Show me. And hey, you know what? You might find one person. So one of you is going to find one person out of thousands of people that are going to watch this video. Well, there's a one person out of thousands. But I guarantee the number of people that have found people, and I want you to leave comments if you do watch this to the end, that know people that are boring, that have systematically grown wealth over their long-term, maybe they're farmers, for example. I got friends that, I've got people in my network that they're farmers and they're wealthy because they just did the tried and true thing, boring, saved up, bought old cars, did all of that kind of stuff, wore boots that are old and worn out, all that kind of stuff, and saved for 40, 50, 60 years. And then now they're wealthy. But other than that, don't pay attention to any of that crap. It does not work, and you're going to get yourself burned. All right, that's modern investing. There you go.